Good afternoon, traders and investors. Will back here with another one, coming to you with a Tuesday market recap. Hope all of you had a very good day of trading today. And in today's markets, guys, well, the bulls continued their push higher, largely helped by big tech names this time. Big tech names have been somewhat muted over the past 2 weeks, but are coming alive over the course of this shortened trading week. This week is one of very low volatility and low volume because of the fact that we have the Thanksgiving holiday coming on the Thursday session, and Friday is a half day as well. The markets were also supported by some macroeconomic developments, especially in terms of geopolitical events that happened today, which was the ceasefire between Israel and Hezbollah, which was later confirmed by President Joe Biden over the course of the afternoon. So that, of course, is a nice step towards peace in the Middle East. Obviously, a long road to go, of course. Very, very complex situation. Everybody understands. But the impact on the markets is one of removing a volatility catalyst from the markets, and that helped push the bulls a little bit higher over the course of the end of the afternoon. So in today's video, guys, we're going to do a few things together. Number one is going to be going over one company earnings that I have prepared for you guys, and that is going to be Crowdstrike. So a lot of focus was on the aftermath of the cybersecurity incident with Crowdstrike that happened roughly about 2 quarters ago. Are they still able to generate new members and more annual recurring revenue? Well, we're going to take a look at their revenue, or we'll take a look at their earnings and see exactly what happened there. Thereafter, guys, we're going to go through our major technical analysis rundown of our major stock market indexes, followed by our big tech names, see if there's any deals left to be had in big tech. And then lastly, guys, take a look at my portfolio for a few of the trades made today and what I keep remaining in the portfolio for the remainder of the week. So all that being said, guys, let's jump right into the action. So the SPY up a cool 0.52%, the QQQ's up a cool 0.54%, and the market overall was doing good. Everybody except for, unfortunately, semiconductors. NVIDIA leading the charge again, but you can see from the list on my left-hand side right there that the whole sector, guys, is still very much lagging behind the rest of the market. They have been really out of favor since July, except for a few key names such as NVIDIA, AVGO, and TSM. But the rest of the index, guys, just not really getting those rallies going to towards the same momentum that we were having just a few short months ago. That being said, big tech did have a very good day. Amazon and Microsoft, the winners there. To the bottom half of the market, though, financials, a little bit of a mixed day, but was green. Healthcare as well, a little bit of a mixed day across different names, but overall was green. And the bottom half of the market here, consumer defensives, industrials, energy, and utilities, not performing too bad. So it wasn't as green as we saw of a day yesterday, but still some very broad market performance. A lot more names were green than red. In terms of the one-day relative, you can see that even better. Largely a bullish day, most of the indexes ending higher. However, some subsectors still lagging a little bit. Industrials, financials taking a little bit of a breather, energy, and basic materials. Where does that leave us on the 1 week, guys? Well, fairly decent bit higher, right? Everything pretty much to the upside, except for communication services, which has kind of been a lagging effect of Google and Meta, kind of trailing behind the rest of the market. But today was a day in which they attempted to play a little bit of catch up. So before we get into more technicals, guys, let us jump right into Crowdstrike earnings. And the numbers were very good, but the guidance fell slightly short of estimates, resulting in Crowdstrike coming down in the after hours right now about 6.12%. But the numbers were fairly good. Just keep in mind, though, the stock has rallied a ton since the last quarterly earnings. As a matter of fact, they have ran 38%. So there was a lot of pressure on Crowdstrike. And similar to other companies that we've been reviewing this past earnings season, well, if the guidance isn't absolutely phenomenal and they're not really crushing the bar and raising the bar constantly, you can get hit with the 6% in the after hours just off of a tiny slight miss on guidance, especially when your stock is up 38% in the most recent quarter. You kind of have to justify those gains if you want the market to be able to push off a little bit higher. Now, moving into the numbers, guys, the numbers were actually very good for this past quarter. 15% beat on EPS. That is fantastic as Crowdstrike continues to move towards being a consistently profitable company. And this was not always the case. All the way through 2022, they were pretty much net income negative. As of right now, in the most recent 7 quarters, they have been operating at net profit margin positive territory, which is a very good thing for the company. They also beat on revenue by about 2.79%. So let's take a look at the article and see exactly what happened. So Crowdstrike earnings beat cybersecurity firms' quarterly revenue tops $1 billion. With Wall Street focused on the impact of the July global IT outage on subscription growth, Crowdstrike on Tuesday delivered third quarter earnings and revenue that topped estimates. A lot of the focus, guys, and I listened to the earnings call as well, a lot of the focus and a lot of the questions was to the everlasting impact of that IT outage back in July. And although CrowdStrike management did say that it's having a roughly $30 million impact on annual recurring revenue, it is not that much in the grand scheme of things. I was personally expecting for the company to lose potentially a lot more clients, and also maybe net new clients would possibly be looking for other solutions other than CrowdStrike. But so far, that's not the case. Demand for their products still remains fairly resilient, but they have lost a few clients along the way, the damage of which is about $30 million in terms of annual recurring revenue. So really not that much. And when we go through the numbers, I'll show you that it's really not that much. Now, moving on further, CrowdStrike earnings climbed 13%, as we already saw, and revenue rose 29% year over year. This company has never had a problem with growing revenue and EPS. You can see they're growing these at a double-digit clip, well over the 20% mark. So very good for the company, maintaining its growth aspect. Amid the IT outage caused by a defective software update, analysts expected lower growth for net new ARR, annual recurring revenue, because of delays in signing contracts and expectations that many customers will seek price discounts when renewing contracts to help cover the cost of business disruptions. In Q3, total ARR increased 27% to $4 billion. So as you can see, a $30 million hit on annual recurring revenue, not that much when you're bringing in over $4 billion of it, right? Analysts had predicted ARR of 4.01, so coming in above the expectation. Net new ARR for the quarter, $153 million, which topped the estimates at around 146. That is very good as well, beating the consensus estimates amongst all of the volatility from the July IT outage. Management noted a strong finish to the quarter and quarter-over-quarter increase in pipeline, despite the July 19th incident, while also highlighting that they are the fastest and only pure-play cybersecurity company to reach $4 billion in annual recurring revenue. So all in all, a very good quarter for CrowdStrike, although there is a lasting, lingering impact of the July IT outage. In terms of the numbers have not been affecting the company that much. So yes, we knew that these 2 quarters since that event are going to be somewhat of volatile events as we continue to navigate through the landscape. But to be honest with you guys, in 1 year's worth of time, I do not think people will even be talking about this IT outage anymore. That will largely all be priced in and behind the company. Obviously, it was an unfortunate event for the company, but they seem to be moving through it quite nicely. The reason for the decline, guys, is right here. The company provided EPS guidance of 84 cents to 86 cents for the period, compared to the consensus estimates of 86 cents. They literally missed guidance by a couple percentage points on EPS, guys. Not the biggest deal. However, when you're in an environment where Wall Street is scrutinizing every tiny little piece, well, once again, this can lead to a decline in the after hours. I know, guys, even when companies report good earnings, sometimes it's a bit of a casino how they react in the after hours. And this is just another one of those events where a company does fantastic, but still gets hit pretty hard in the after hours, despite a very, very, very small miss on guidance. Now, take a look at the quarterly numbers here for CrowdStrike, guys, and you will see that everything is fairly good. Right? Ending ARR, 4.02 billion, the net new ARR, 153, very good. Nice operating profits and free cash flow. This is a very good factor for the company, guys. The company not being profitable before, now they're really turning into a free cash flow machine. Take a look at the increases in free cash flow year over year and quarter over quarter as well. They continuously put out roughly between $200 and $300 million in free cash flow. Very good for the company. Another quarter of positive free cash flow at about 231. If we can take a look right here, you can see that they're targeting a $250 billion market. As of right now, it's only $116 billion, but it will be growing. So there is tons of room. But as I've said before, the cybersecurity industry is one that I do believe over the next 2, 3, 4 years, it may just be consolidating towards the top players, and it's going to be very tough for the smaller players to kind of chip away at the lead that players like CrowdStrike and Palo Alto have already carved out for themselves. So let's move on a little bit further. As you can see, CrowdStrike named a leader. Take a look at this zoomed in chart. You will see that for the most part, CrowdStrike, Microsoft, SentinelOne, Palo Alto Networks, and Trend Micro are up here. We have another one of these down here from this time a different institution, right? So you can see that once again, CrowdStrike is placed top of the board, them, Palo Alto Networks, and Trend Micro. It's really a race between, in my opinion, guys, CrowdStrike and Palo Alto. The competition, although is there, I do not believe we'll be able to catch up with the lead that these two institutions have carved out so far. It's probably going to be a neck and neck battle between CrowdStrike and Palo Alto Networks, and everybody else is going to kind of be following. And I'll let you know how I'm playing these when we go over the technical analysis in just a few short moments right here. In terms of the financials, guys, well, there's your ending ARR. Very nice increases year over year. Of course, we had a slight decline quarter over quarter, and that could be attributed to some of the events from the July IT outage, but overall fairly good. Total revenue up 29% year over year. That is very solid. And subscription revenue, the metric that matters the most, arguably, is up very nicely on a quarter over quarter basis, measured quarter over quarter on a year over year basis type of thing. 31% to the upside. So looking very good, guys, whether it's in their consistent performance in terms of positive net margins. This quarter came in around 3.1% of positive net margins, which is in line with what they've been doing for the past 5 quarters. It does oscillate. It is a little bit lower than they've had in the past 2 quarters, but still positive territory, positive free cash flow as well. All in all, a very decent quarter for CrowdStrike. I was expecting the damage from the July IT outage to be a lot more notable than this. So nice to see that the company is managing expectations and taking care of clients who may have concerns and is not really getting punished that much through the loss of clients or the loss of potential new clients as well, as they reiterated that their pipeline for new clients remains very strong. So here you have it, guys. In terms of the valuation, well, growing revenue and EPS at a very fair pace, as we can see from the growth prospects. EPS expanding fantastically, and the revenue is expanding fantastically as well. But take a look at the analyst price targets right now, and it does make sense, guys. The valuation of this company has always been a concern. I was extremely interested when we got some very steep discounts back here, but over here, I cannot say that it makes me that interested. Why? Well, because at $340, which is the price in the after hours right now, you're trading at a forward PE of 93.66, and when we divide this by their EPS growth rate through the next 3 years, we get a PEG ratio of 3.74, which is very, very high, admittedly. So it is not a good deal right now. Can this company, if it's for a long-term portfolio, the next 5 to 10 years, can this company continue to be one of the industry leaders with Palo Alto Networks? Absolutely. But if we're looking for a short-term bet on the company right now, well, the valuation kind of slightly keeps me away. And it's the same thing for their main competitor in Palo Alto Networks. We didn't cover their earnings last week, but the earnings for this company were fairly good as well. And you can see Palo Alto Networks, the exact same problem. We're trading just under a 4 peg. So a lot of these companies in this industry, guys, trade at very, very, very rich valuations. Whether you take a look at a company like SentinelOne, whether you take a look at a company even like Fortinet right now after their increase, a lot of these companies, I don't have the peg for SentinelOne on the chart right now, but if you take a look at something like a Datadog, let's say, we're going to go through a couple of these cybersecurity plays. Datadog, same thing, 3.5 peg, and we did that at 117. So you can imagine that it's closer to 4 at this current time. Cloudflare as well trades excessively rich because these companies are growing very, very fast. And you know, to be fair, Wall Street just keeps bidding them up. At $74 is the last time we did the valuation, and now they're a lot higher. These growth rates have not changed that much. So also Cloudflare trading at roughly a 4 peg. So this is an industry that as a whole is fairly expensive, to say the least. So the way, instead of me trying to pick who is going to be the biggest winners, well, I can go out on a limb here and say that it's going to be between CrowdStrike and Palo Alto Networks. Which one grows faster is a toss-up at this point in time. The companies have overlapping business models, to say the least. I know cybersecurity is a very complex topic, but there is some overlap in the business models between Palo Alto Networks and CrowdStrike, to say the least. One of which I present, one trade that I present a lot every time I cover these every single quarter is WCBR. So I do not own any cybersecurity companies outright. I have taken an ETF approach to this index just so I don't have to pick and choose between which companies will outperform others. I let the active managers do that for me. And this is the WCBR Wisdom Cybersecurity Fund. In my opinion, it's probably the best ETF to have direct exposure. There's no Microsoft in here. There's no Google. There's no Apple. There's no side plays that shouldn't be in there. These are all pure play cybersecurity names, all of which have relatively equal weightings. There's 25 names in this company, or in this index rather, and this is the way that I've been building a position in this lower area, have not added to it in a while. admittedly. However, this is one thing that I like to do when I don't want to choose in an industry which ones will outperform, and when I have a little bit of valuation concerns, I tend to bundle everything into an ETF and kind of just let the industry as a whole expand into the total addressable market. So that's just the way that I'm playing it myself in terms of cybersecurity exposure. So pretty much take your pick is kind of what I'm saying for these cybersecurity plays. But as of right now, Crowdstrike is a no trade for me. In the event we start retesting some of the lower levels that we had just prior, you guys remember I had a swing trade on Crowdstrike. We picked it up earlier in the 285 range. We rode it all the way up to about 230 before it kind of really started expanding on us. In the event we revisit down here, 309 down to about 290, I would be interested in revisiting this company for a buy because we would be approaching a very, very big support area and could give us a better indication of some levels to trade off of. But right now, a little bit too rich for me. And that's everything I had for the Crowdstrike earnings. So hopefully you guys appreciated that. Now, moving on to our technical analysis portion of the video, guys. So moving on to the SPY, we're going to fly through these a little bit quickly today because really still not much has changed. New all-time highs, barely, but new all-time highs on the SPY today. Daily uptrend continues in motion right now. And in the event we top out soon, just understand we got a lot of space now, guys. Anything above 584, just going to be looking for a daily higher low for the possible trend continuation. Overhead resistance stays planted around the 610, which is pretty much this directional trend line as we've pasted on the chart right there. So daily uptrend full in motion by the bulls. Weekly uptrend is also equally as gorgeous right now. So essentially, I'm going to do just that. I am going to continue playing the trends as they manifest. Are there certain bearish catalysts in the market? Yes, and I'll do a full video dedicated to this on the Thursday session because there's no market, there's basically the market's closed on that day. And I will be covering all of these aspects that leave some people very, very bearish towards the markets. A lot of people calling that the market is topped right now, the market's overvalued. I mean, take your pick, guys. I've drafted down about 15 different points. We're going to go through each and every one of them and see, despite all of these negative points, why does the market continue pushing higher? So I still remain cautiously, keyword, cautiously optimistic about these markets, but the way I'm trading it is I'm taking profits when they're due, not getting extra greedy, and also not FOMOing and YOLOing the top of certain stocks that have ran a ton. I'm being very cautious in the names that I choose to trade, and most of them are still at significant discounts from their all-time highs. I'm not in the business of chasing the market right now, even though that's what a lot of people would want to do and want to see. I'm playing this in a cautiously optimistic fashion with my longs, and also still playing the infamous wheel strategy that I like to run on the channel, basically selling premium on red days well below the market. Moving on to the QQQs right now. QQQs also remain fairly healthy. Daily uptrend is still in motion right now, and the bulls look pretty good, but severely lagging behind the SPY. And a reason for that, guys, remains the underperformance of semiconductors. The QQQs absolutely need the performance from a lot of key semiconductor names to continue pushing higher and starting to outperform the SPY. QQQ has kind of been lagging behind the S&P's performance for a long time at this point, right? For at least the past couple of months, they've kind of just been trailing as other indexes, such as financials, really start blitzing ahead. So QQQ, still a little bit of underperformance, but the bulls have not lost the trend. That will be a loss of the 494 level. So keep special attention. If we do have a pullback, guys, may just be attempting for a tightening range, but pay special attention if we break down below. That will be the loss of the daily uptrend and into further weekly consolidation. Good thing for us. The bulls are in full control right now of the weekly timeframes, looking for weekly higher lows at this point in time. Right at this point, anything above 484 on the weekly, just going to be looking for a weekly higher low for possibly a bit of weekly sideways consolidation as we kind of continue to get the intra-sector rotation between big tech and rotation between semiconductors. It's been a long time, guys, since I've seen a day where all of big tech has been green and all of semiconductors have been green as well. So just keep that in mind. The one thing holding back the Qs are the infamous semiconductor stocks. Moving on to financials right now, still a very good day for financials, up about 0.2%. Daily uptrend is still maintained right now. Just looking for a higher low, guys, as soon as this move is topped out. And how do you know these moves are getting toppish? Well, just watch for a loss of the hourly trend. This is not a loss of the trend change right there. Need to have a close of the hourly below. We do not have it. In the event you see the hourly trend rollover, you know that daily consolidation is underway. Just going to be looking for a higher low, anything above 49.3, higher low, resistance, which is now going to be current support, and the 12 EMA, that will be the next line of defense for the bulls before they potentially attempt a furtherance of the continuation of the uptrend. Looking really good on financials into the lower interest rate environment. Taking a look at healthcare right now, healthcare continuing their bounce, and now we're talking, guys. So this whole time I was saying, watch the size of the bounce, watch the size of the bounce, and now we have a decent sized bounce. Coming into resistance, of course, resistance range is 148 down to 145, so we're already within the confines of this range of resistance, and the longer term moving average, such as the 200-day EMA, is right above us as well. So the move could be topping out soon. However, the size of the bounce has been fairly good so far. We have eclipsed the 50% rate, and now we are on the move to the 618. The more space that the bulls create, the better the odds become of them being able to reset into a daily uptrend, and that would possibly also start a weekly reversal pattern process, because we know we've been stuck in this weekly downtrend for quite some time. The bounce is nice on the daily, which is translating to a nice weekly bounce as well. As soon as the bulls kind of lose this, right, daily downtrend, we'll be looking for the weekly higher low to possibly get a weekly trend change underway and start reversing some of the monthly damage as well, because we know the bias still remains bullish. The bulls never lost the monthly uptrend and never lost the key support zone on the monthly, which is down below here, 140 down to 134. So we'll keep our eyes posted on this one as the bounce progresses. Moving on to semiconductors now. So semiconductors, the analysis remains the same, guys. I've been talking about this now for the past month and a half, right? We are trapped between two levels. We cannot break overhead resistance of 260 down to 250, and we cannot also breach down below 237 down to about 227 to the downside. Trapped between two 10-point ranges for the moment. So the short-term price action, guys, even though it does look like a daily downtrend wants to be had by the bears, that will be a break of 237. But if you break 237, you end up in a very big area of support, and the 200 daily moving average is down there as well at about 230. So the bulls still trapped right now, and you can see that even better on the weekly. We had the weekly uptrend and then just pure loss of direction. You can argue that this is a weekly downtrend, and I would agree, but it also kind of looks like a sideways bit of a range, right? In the last month and a half, 2 months of trading. So still trapped between these two levels. I don't think we'll get many indication of continuation until we really break one of these two levels to the downside. Now, the bias does still remain a little bit bullish here because the bulls never lost the higher time frames. We are still kind of consolidating sideways in this big old bull flag right now, which is looking fairly good. As long as we're above this level right here, above the 12 EMA, I cannot say that the bulls have lost the longer term uptrend or the long-term momentum. So as of right now, still just sideways consolidation. And the way that I prefer playing this consolidation is doing what I do best on the channel, riding short puts well below the market on my favorite names in semiconductors right now, the three of which are NVIDIA, TSM, and AVGO. Moving on to IWM Russell today. So the Russell, a little bit of a pullback after yesterday's 2% day. Not too bad, a little bit of a gap fill as we left the gap behind us yesterday. So as of right now, the bulls still remain in full control of this sector. As you can see, daily uptrend is clear as day right now, looking possibly for a new higher low for the continuation of the trend expansion. Where could we maybe come back to? Possibly the 12 EMA. Wouldn't want to see them give back too much of this move though, guys, because then you kind of lose all the momentum and you go into one of these consolidation ranges that you got trapped in all the way back here. So as of right now, not looking too bad. The bulls still control the weekly uptrend and we are in a new weekly leg higher, looking really good. I'll remind you, the next resistance area is going to be the 250 psychological. So as of right now, no major red flags for the bulls. The bulls are looking pretty good as of still. And we'll keep a close eye on how this one evolves. But as of right now, no signs that the bulls are looking to kind of give this up in a big fashion. Moving on to the Dow Jones. Dow Jones pushing a lot higher. The Dow Jones arguably looks the best out of all indexes, right? If I pull up the SPY, it looks a bit iffy, right? I mean, if you take a look at the futures, the SPY looks really good on the futures, but just the S&P looks a little bit iffy. It is a nice uptrend and we probably can get some continuation higher. The QQQ's also not the prettiest chart, right? But the Dow Jones is clear as day. The bulls are in full control. Beautiful daily uptrend continuation right now. As soon as this move is topped out, looking for a higher low, anything about 43,000 actually. Going to be looking for a higher low for further trend continuation. And where could we maybe come back down into? Well, the prior resistance, which is now going to be support, which is also lining up with the 12 12 EMA, something that the Dow Jones has really liked protecting for, more times than not as this bull rally has marched on through the months. So we'll keep a close watch on the Dow Jones, but as of now, looking quite good, and they never lost the weekly time frame, guys. Still a massive weekly uptrend for the bulls, so any pullback, just going to be looking for a weekly higher low for further trend continuation. All in all, no major big red flags. We covered the yields yesterday. The yields still remain the same. TLT could be an area where we can kind of start bidding. They recaptured a key zone of support. As you can see, this has been on my chart for a very long time right now, recapturing it in a big way, using it as support, possibly due for a little bit of a rally here as we continue to get a slight slide in the longer term yields. Now, I'm not expecting a massive drop off like this, but can we just slowly grind down the levels? That is obviously possible. But as I've said, this is a trade idea for a TLT long into 2025 as we move through the rate cutting cycle. However, it may move a bit slower than you anticipate. So if you are playing this one, give yourself at least a longer time horizon than maybe the next 30 to 60 days. Now, moving on to other names, let's move into Bitcoin. So Bitcoin has dropped a ton, guys. Is it over? Is the bull market over for Bitcoin? Well, that's debatable, right? All we can say as of right now is the bulls are just looking to set up for a daily higher low. They control the entire daily uptrend right now, looking for the daily higher low, anything above 88,900, looking for that daily higher low. I will admit that this move down is a very, very big move down, coming down into prior resistance, which should now be current support. But if we breach below here, guys, there's not much. They didn't really set any support on the way up, which leads us into the weekly chart as well. The weekly chart looking like it does want to pull back a little bit. Weekly was a little bit overbought, but that's not a lot for crypto. We know how long crypto can sometimes stay overbought. And a good portion of this as well is just due to the lowered volume during the Thanksgiving week. So a lot of people are not here. A lot of institutions are not bidding the ETFs. And that's why we have some steep declines on Bitcoin yesterday into today. We'll see what's reserved for the rest of the week. I am not personally chasing this trade, but if this trade wants to come to me and retest possibly some of the mid 80 levels, 80,000, I will be playing it. And the way that I usually play Bitcoin, I have my longs that I'm not selling, guys. But if I'm looking to play Bitcoin, I'm liking to play BITX on a pullback, guys. I think we could get some phenomenal premium down here in the mid $40 range if the move down still does continue. Obviously, be careful. Crypto is obviously risky, and even MSTR, right? I had a lot of people, guys, asking over the last few days, last week, whether or not it was a good idea to be bidding MSTR up here for the just continuation, guys. Do not FOMO into these names. Wait for them to pull back. And now we finally have a very big pullback on MSTR. And I do believe the entire time that Bitcoin could be in weekly consolidation, maybe this week and also maybe the beginning of next week as well. Well, that's going to heavily weigh down on MSTR's price action too. So MSTR maybe even looking for a retest of the 300, right? Sometimes it does that. Pulls up a lot, and then a retest of the 12 EMA. So the 12 EMA is going to be my guide for a little bit of a retest because we didn't set any big weekly support down there. So 270 up to about 300, this gap fill area, could be more expected than not on MSTR. And if it does come down there, guys, I may try my hand at possibly some shorter duration call options if we somehow get, Bitcoin coming down into shorter term oversold conditions down here in the mid 80s, maybe a striking distance for MSTR as well. Moving into our big tech names now, give me a very brief moment. So taking a look at Apple up about 0.94%, guys, very close to the all-time highs. Apple is just kind of being dragged along with the rest of the market because it's definitely not something that the company is doing themselves other than tremendous amounts of buybacks, right? We know that Apple has a bit of a valuation problem right now. The PEG ratio is excessively high, and they have a little bit of a revenue growth problem as well, right? That is why I'm not extremely bullish on playing Apple right now. If you can see, guys, the revenue for Apple over the last, let's call it 7-8 quarters has largely been flat. Put it on a quarterly basis, right? Very flat revenue almost over the last 2 years. So that's why I'm not jumping over joy, super excited to be buying this company at the all-time highs in an area where I do consider them to be fairly overvalued. However, that being said, a trend is a trend, and the bulls are deeply in control of this one. All-time high acting as resistance, 234. 237.50-ish, let's call it. And any pullbacks at this point, going to be looking for a daily higher low. Anything above 222 down here, looking for the daily higher lows for possible further trend continuation. So this could be a good old breakout, retest, and run trade if they do offer that to us. I wouldn't be going too heavy for this one, but there is a decent trade location right here on the possible retest for a breakout of the all-time highs. On the weekly, things are also looking quite decent, if I do admit so myself, right? They're trying to recapture this weekly uptrend, and a break of the all-time highs could do it. So there's a shorter term trade right here in the breakout of this level, retest of the range, and then possibly run. But there's a longer dated one as well. In the event we break the all-time highs and eventually retest the all-time highs, this is a big level, guys. If the bulls break this in a big fashion, go up to like 245, 250, and then maybe retest the 235 area, could be another retest entry trade for some longer duration trend continuation. So just a few trade ideas for Apple. Myself, I'm kind of waiting for a bit more of a pullback. If we do pull back, maybe I'll write some short puts down there, but there's so many other better opportunities in the market right now, in my opinion. That's why you haven't seen me play Apple that much in the most recent past few weeks, past few months, because I've been playing things that have much better valuations, in my opinion. Moving on to AMD right now. AMD, unfortunately, guys, for every up day, there is like 5-6 days of red, right? It's very unfortunate. AMD cannot get itself out of this rut. So although the sentiment on AMD right now is not the best, although the price action on AMD right now is not the best, I will remind you of the investment thesis behind this company. Yes, they're player number 2 behind NVIDIA, and they most likely will never catch NVIDIA in terms of sheer market share for the data center revenue. That being said, the fundamentals of the business are quite good. All of the analyst price targets are above the stock, and with good reason. Look at the EPS expansion that the data center business is going to bring to them. 2024 is the last transition year before they really start blasting off. Take a look at the quarterly increases in EPS, and take a look at the annual and also quarterly increases in your revenue line as well. And most of that is going to be coming from data centers, which has left this company with a very fair valuation down here, in my opinion. We did it at 154, but I can redo it at 129 right here, or 137 rather. Just divide 137 divided by your 3.42 ending 24 EPS, and you divide that by your EPS growth rate, you come to about a 1.14 peg. That is a very fair valuation for this company, even though it has not been shown a lot of love, and even though the price action also has been quite miserable, to say the least, the valuation and the investment thesis of the company do still remain strong if that is something that interests you. That being said, daily uptrend being challenged right now. We know they had it, but we know the daily higher lows are right here, 135. Lose 135, guys. Unfortunately, we are probably revisiting the lows, or maybe even lower, as we just continue on this weekly down cycle for the stock. We had the weekly uptrend, loss of all the momentum, and now the next stop, if we breach below, will be about the 127, 125. And below that, unfortunately, guys, we go a lot lower, go all the way down to about the 115. 115 would be a screaming buy, in my opinion. Not quite sure if we're going to get there, because that's still a steep drop. I'm just saying, in the event that we do get there, I will be bidding. The way that I'm doing it now, though, guys, is if I see a big red continuation candle down here in the next few days, clipping into the lower 130s, I'll be looking to write some puts possibly in the lower 120 region, which is very fair value in my opinion. I've been favoring playing NVIDIA a lot more over AMD recently, just because NVIDIA has been able to hold up its price action a lot better. But if AMD gives me the chance coming down here to play the 125 puts, the 122 puts, I will be looking for those in the next few coming weeks. Moving on to Amazon right now. Amazon having one of the best days that they've had essentially since the day after the election, right? 3.18% to the upside. And we knew that this was a possible scenario, even though we lost the daily uptrend right here after having it, right? Loss of the daily uptrend. We knew that when we were looking at the loss of the daily uptrend on the higher time frame, such as the weekly, we know what we were expecting. We were only expecting a weekly higher low for possible further trend continuation. And the bulls really showing that that was the clear intention all along. Now, that being said, guys, we have created a lot of space off the lows here, trying to reset the daily uptrend. So as soon as this move, fully engulfing move at this point in time, right? As soon as this move tops out, going to be looking for a higher low, anything above 196, looking for the daily higher low for possible further trend continuation. So watch out for that daily trend change continuation pattern. It will let you know that the weekly bulls are possibly on for another monster leg higher, and we will be targeting at this point in time $220, which is a fair price for Amazon. As a matter of fact, that is the median average, or slightly under the average price target of analysts. And take a look at this company, right? The next 3 years, 4 years will be all about EPS expansion for the company. Amazon has never focused on shareholder value, and that has been front and center in their last 2 quarterly earnings reports, focusing on bottom line EPS, focusing on increasing free cash flow, reducing capital expenditure as well. Those things you've usually never seen at Amazon, right? Those are things that other companies like Microsoft do, like Google do, but Amazon has always been top line growth at all costs. Now they are putting the shareholder first, and they're going to have a lot of EPS expansion, a lot of free cash flow expansion too. Possibly in the next few years, Amazon may even start doing some buybacks, because this company has not done buybacks for now in a while, at least not on the same scale as you see some of the other Mag 7 names do as well, right? Revenue increases will be nice as well. So I like this company a lot. The valuation right now, even at the $207 range, is quite fair. I wouldn't say it's extremely cheap, but it's not very expensive either. If you put it on a PEG ratio, it's about a 1.48 back there at 194. So right now, what is it? Maybe like a 155, 16. That's not that bad in the grand scheme of things. A little bit of meat left on the bone here for some trend continuation. Moving on to Google right now. Google up a 0.7%. Not too bad. Still in the recovery process from the Department of Justice headlines that hit the stock really, really hard last week. So I'll remind you guys, daily downtrend was underway. And now what are we looking for? The context of this daily downtrend mattered a lot. The weekly bulls still are in control right now, looking for a weekly higher low. Anything above 162 was to set that weekly higher low. And I was letting everybody know on the channel that if we approach this support zone down here, 164 to 160, this is a juicy area. Either be picking up some shares for a long-term portfolio if you have a long time horizon and you have not been put off by the litigation risk that the company faces right now, or basically for writing short puts as part of a income strategy over the next few weeks. Happy to say that Google has now bounced off this area, but it is not out of the woods yet. I would need to see a more significant bounce by the bulls here to be sure that they have the chance of reclaiming the uptrend. As of right now, only a 38.2 bounce. So the bulls, if they were to stop this bounce right now and reverse, essentially, well, the probabilities would probably favor at that point a rollover and at least a retest of the lows, if not a little bit lower. Good thing though, if we do come back there, I will be trading it more heavily as per Google. So I wouldn't say the bulls are out of the woods just yet, but it's not looking terrible. Still trying to find somewhat of a base of support in this infamous 160 area that the company has been trapped in since the month of August. Essentially, I still do believe that Google is one of the best deals in the market. As I said, if you can get beyond the headline risk of the Department of Justice issues right now, then it is indeed one of the best deals in the market. But if you do not want to play it because of those headline risks, that is completely understandable, guys. Moving on to Meta right now. So Meta up 1.5%, looking not too bad as they try to recover this daily uptrend that they just most recently put in motion. They had the daily downtrend, now resetting into the daily uptrend. Why do we have a slight leaning bullish bias right here? Well, it's the longer term timeframes, guys. This is, even though it is a weekly downtrend, I believe that it's a weekly bull flag in all reality, right? You can see the clear indication that the bulls have smashed through a very big area, which was the 540 down to about 520 range. And I was always saying, in the event we retest this range, it can open up one of my favorite trades, which is the breakout of a big area of congestion and retest it, especially when viewing the monthly trend that this stock has been on, right? A retest of this level, in my opinion, would be a gift because even at 574, the current price, the company is not trading so rich. Very decent free cash flow yield, amazing net margins, and very good revenue and EPS growth numbers. So for all those reasons, Meta still remains a very solid company in my opinion. The valuation right now, well, admittedly, it is a little more rich than when I was last buying the company back here, but still relatively fair valuation in my opinion, all things considered. That being said, in the event we fail and roll over again, you guys know the drill. If we start revisiting the 530, 540 range, I will be a buyer of Meta stock down there and probably going with a heavier call option for some continuation into 2025 because the guidance for 2025 should be very good. Moving into Microsoft right now, Microsoft up about 2.2%. Also one of the best days that Microsoft has seen, largely since the day after the election. Microsoft now trying to challenge, once again, the infamous area of resistance above us, 434 down to about 422. Are they going to get through it or not? Well, I guess we're going to find out, guys. There's still a little bit of an earnings gap left to be had here around the 432 mark, but the bulls are not looking too bad, right? If we were to kind of smooth this one out, you could say that this is one clean daily uptrend, but in all reality, it is really not, right? This was the daily uptrend. They lost the higher lows. Now they have to do a good job of getting it back, which they got back today. It's very, very choppy, which is why I keep saying on Microsoft, the clearest time frame for me is the weekly time frame. And I'm not talking about the clear head and shoulders pattern. I've addressed this a few times on the channel, guys, right? And I always come back to the same thing. Unless the SPY and QQQ drop 10-15% because we get some really recessionary data or things like that, right? Unless the SPY and QQQ drop 10, 15, 20%, do you guys think that just because there's a head and shoulders on this chart that Microsoft is somehow going to drop from here all the way down to there 20% for no which reason other than the fact that there's a head and shoulders here? Probably not, right? The context matters a lot. So the reason I say the weekly chart is the clearest, it's just because we're looking for the eventual recapture of the weekly uptrend. And in my opinion, we're only going to get it if we can break and close above a weekly candle above the 436 range. We have not had a weekly candle, at least not a green one, close above that range all the way since the month of June. So if they do break this, guys, I do think that they are going to get some decent follow through. And take a look at your MACD. The MACD is usually a trailing indicator. It doesn't allow you to pick the bottoms of certain names, but when you have a possible recapture of a weekly uptrend, you break through a major key resistance level and the MACD is crossing, usually those are some good indications that you will be getting some follow through. So we'll keep our eyes peeled on Microsoft. I was advocating for people to be trading this one, buying this one, whatever your desired investment vehicle is in this lower range. And now we are up decently on those purchases. I do not want to get too much ahead of myself because we still have a lot of resistance to get through. But as of right now, not looking too bad for the bulls. Moving on to Netflix. So Netflix up about 0.81%, but we are still kind of in consolidation mode for Netflix, right? Beautiful last 3 weeks worth of rally, still trying to find a daily higher low. At this point, anything above 806, looking for the daily higher low for possible further trend continuation. We were noting the fact that up here, we were very, very overbought on the RSI. And I was also noting that, this is not NVIDIA. Usually when Netflix hits those 82, 83 RSIs, we tend to get a snapback in a relatively quick motion. It does not stay that overbought for that long. And that is why I was cautioning that buys up here may not be prudent. You may as well be waiting for the pullback. If the pullback somehow translates into a loss of the daily uptrend, well, the weekly bulls will be there to play defense. Beautiful weekly uptrend right now. Tons of space for the weekly bulls, anything above 750, 746 rather. Let's just call it a weekly higher low for further trend continuation. And if we come back somehow, maybe in the $800 range, 800, 810, that could be an area where we could possibly find some decent swing trade opportunities if we get a retest of the 12 EMA. Netflix does this sometimes to where they pull up a lot from the 12 EMA, ride higher, and then eventually we do pull back into it. So I'm kind of waiting for them to kind of either fizzle off and pull back into it slowly or just pull back into it in one clean shot to open up those trend continuation trades. So as of right now, not trading Netflix, but also I'm not selling a single share in my long-term portfolio. I think that the future of the company is going to be a lot brighter as well. Moving into NVIDIA right now. So NVIDIA up a 0.66%, which is a lot more than they can say than its sector peers. NVIDIA, the only one, once again, carrying the weight of the SMH on its shoulders. And although today was a red candle, we did have a nice green day. That being said, clear loss of the daily uptrend right here. Daily downtrend is confirmed. And where are we possibly heading if things continue to be a little bit weak in the semiconductor niche? That is going to be the 130 down to 125. My preferred area, if I'm looking to shop for some call debit spreads or maybe some call options for a little bit of a little bit of a reversion trade, something like that, a little bit of a bounce trade from the area, this is the area that I'll be targeting. So even though it's a daily downtrend, and even though we are in the form of weekly consolidation right now, in all reality, what we're looking for pretty much is just weekly consolidation near the tops, right? It reminds me of exactly what NVIDIA did over the course of last fall as well, before going on one more of its stellar rallies. So if there's a little bit more consolidation, guys, I'm all for it. You will find me positioning with either shares or call options here with a lot of time on them. Call debit spreads are valid as well. And if we pull down to this range, I will be complementing as well, maybe with some more short put options in the 120 range, which is my desired assignment area in the event I'm looking to build a sizable swing trade position in NVIDIA. I have to get a little bit more greedy with it, and for that reason, a lot more of my short puts moving forward, at least the bigger sized ones, will be down here in the 120 to 115 range. But as a whole, guys, NVIDIA, although it is in a daily downtrend, although it is in weekly consolidation, I cannot say that there's any major red flags on the chart right now. It's just the whole semiconductor industry has been a little bit weak, but with the guidance that a lot of these players have given, the early portion and mid and late 2025 should be a very good year of expansion for the industry as a whole. 2024 has remained, although we've got the bullish AI narrative behind us, the fundamentals of the businesses, a lot of them at least, have been fairly transitional through 2024, and we've recapped that every single one of the past few earnings cycles that we've covered a lot of the companies, except for NVIDIA, because NVIDIA's demand is always through the roof. Now, moving into Tesla down a very tiny 0.11%, and now Tesla is once again doing absolutely nothing. They try to pop above, snap back down below, and now this 335 area is kind of like a magnet, right? So daily uptrend right now is still in motion for the bulls, but at this point, guys, we've consolidated here for so much times. We've pushed the highs. We've not made new highs. So at this point, I have to give it to them, right? This is the daily high or lows at this point in time. If you lose these, you will lose the daily uptrend. It won't be a daily downtrend, but if you lose it too big, then you open up the door for the daily downtrend formation, which would just be a little bit of healthy weekly consolidation. Obviously, after a massive push like this, weekly consolidation can be warranted. That being said, who's in control of this chart right now has to be the weekly bulls. So any longer form consolidation in Tesla stock will probably be met by the bulls down here in this range. 310 down to 300 is the desired target range. If we pull back into this range, it can open up some short put opportunities because there's some great volatility on the stock. Down here, 280 all the way down to roughly 260 is going to be the range. If we pull back here, I will be writing some options down here, because just to benefit from some of the volatility. And obviously, to the flip side, if we just expand upon this daily uptrend, well, the next area of resistance above for the bulls right now is sitting pretty much at about 380 up to about 400, which in all reality is the prior all-time high range of resistance. So a little bit I'm waiting for the swing trades, guys. I'm waiting for the pullbacks on Tesla. Don't mind playing it, but now it's kind of equidistant risk to reward, right? The reward is up here, the risk is down there. It's kind of equal zone. So I want that risk to reward to get better, right? If we come down into here, then we have all this of possible upside for only a little bit of this as of downside. That's when the risk reward becomes more favorable, of course. Moving into Palantir right now. So Palantir also with a nice, beautiful green day, 1.69% to the upside, but Palantir moving a little bit slower than it did back here, of course, but that's completely normal, right? The daily uptrend is clear as day for the bulls right now, right? Daily uptrend looking a little bit higher, and any pullbacks just gonna be looking for a daily high or low. Anything at this point above, let's call it $59. It's just gonna be looking for a higher low for further trend continuation. And if they do not continue the trend, they can just consolidate sideways above this range. What you would not want to see if you're a short-term bull, of course, is the loss of that $59 level. If the bulls lose this, it opens up the door for the lower high into the lower low, daily downtrend flush, which would just be a very healthy leg of weekly consolidation, guys. Take a look at this, just looking for a weekly higher low for possible further trend continuation. Palantir is not looking too bad at all, guys. It is looking fairly good. I have to redo my levels because the old Palantir ticker was removed, as now they're listed on the NASDAQ exchange. So I have to kind of redo the levels. But all you need to know is in the event Palantir comes back down here into the, let's call it mid-50s range, I will be bidding this one in the lower $50 to $45 range using my favorite instrument, which are the short puts. As of right now, the company remaining a little bit rich fundamentally, and also a little bit rich on the weekly RSI levels. That being said, the bulls, no signs of weakness just yet and no major red flags. So that's pretty much everything for today's stock market rundown, guys. In terms of the positions today, well, we covered a bunch of the swing trade ideas yesterday at the end of the video. So if you haven't seen those, please go back to yesterday's video. I won't cover them today because we spent about 7-8 minutes worth of time yesterday and went through a ton of tickers. But if you want to see the new updated trades that were made today, essentially, guys, Well, we closed a couple of the wheel trades that we had running on the channel so far this week. Number one of them were Google. You guys remember? I wrote these Google puts at the end of last week for $1.12. The 165s after the DOJ headlines, I went for the 165s for $1.12. I was able to close them today, as a matter of fact, for 90% profit before the week is actually finished, and reallocated the capital elsewhere. So those were looking pretty good, guys. That's one of the major contracts that I did close over the course of the day today. So as of this week, guys, we are performing very, very well. And also the earnings trades that I took yesterday, if you can see them right there, we had the Zooms and the Best Buys. Even though both of these companies were down, we were able to kind of close both of these companies at a win. You can see the Zooms we picked up here for 18 cents in credit, the Best Buys here for 17 cents, and we were able to close those for some okay gains, right? The Best Buys didn't cooperate so much. I closed them very early in the morning, as you can see, because I wanted to reallocate the capital to some different plays, which I did thereafter. So taking a look at the plays that we have remaining, I'm not going to go over all of the other plays, just the new plays. We'll do a full portfolio recap on the Friday session and go through every one of these lines. I did it last Friday, and none of these major lines have really changed since then. So if you want to see an explanation behind each one of these positions, you can obviously go to last Friday's video. It's at the end of the video. But just for a quick update, so I played Crowdstrike with my 2 times the expected move strategy, whereby you measure the expected move of earnings, like workday here was 9.5%. You go 2 times that, and then you write the short puts at that level. So that was the Crowdstrike trade, and also it was lining up with the previous area of good support, which at the current time was all the way back down there, roughly around the, let's call it 305 down to roughly 290 range, right? So 305 was the top end of that range. Below that, there really wasn't much premium available. So I took a little bit of what's not really a risk. This was 2 times the standard deviation away. So this, we got a 51 cent credit, looking quite good. We still have the BITXs on deck for the $50 strike by Friday. If we get a sign there, I wouldn't mind, because the covered calls are very, very juicy on that name. And other than that, we added another contract of SMCI on the SMCI drop today, 29.5 strike for 19 cents. Above our 0.5% rule and a very, very wide margin of safety on these SMCI, guys. You can see I got 2 contracts running for the week, 31s and the 29.5s. Both a little bit underwater right now, but look how much space I have on this trade, right? Down to 31 is an extra 10% by Friday, and all the way down to 29.5 is an extra 14%. If they want to assign me those shares, no problem at all. There's some very good premiums writing some covered calls, and I would not mind building a little bit of an SMCI position over here as the company remains weak. I think that when semiconductors as a whole have their next leg of rally, I think this trade will be rewarded as well, possibly targeting the upside of the high 40s to 50s as the next take profit zone for this possible weekly trend expansion. I'm not calling to go back to the all-time highs, guys, just a little bit of a weekly trend reversal into this level with an overall semiconductor rally. So those are the only updates for the new plays that I made today. It was a fairly light day, all things considered, just because I'm waiting for more deals. There was a lot of possible entries over the course of the morning, guys. In terms of the list that was read, there was CLH, but a lot of them, because of the shortened trading week, they weren't providing the best premiums. And I'm not yet convinced that I want to write premiums for next week just yet. For that, I will wait for the Friday session, maybe even for the Monday session, for the normal volume and volatility to kind of come back to the markets. But as of right now, slim pickings on the remaining premium for the rest of the week. We did take the SMCIs. There was some trade opportunities on Elf Beauty down here, but for the week, you can only get as good as the 119s. And the 119s are above the expected move for the week, so I wasn't too interested. Next week premium is good for down the 110s, but if Elf continues dropping for the rest of the week, I may as well just wait till Friday, guys, for a better entry on Elf. And the same thing for Enphase as well, and Uber too. Uber, I love this one, guys, but there is literally no premium here at all unless you're trading the $70 strike. And even at the $70 strike, there's really not that much there at all, guys. Take a look at what I mean, right? This week is very, very, Wall Street is being stingy with the premiums this week. It's normal because it's a shortened trading week, right? So take a look at the 70s. There's only 15 cents right there. In a normal week on a Tuesday session, there would probably be at least 35, 40 cents of premium on these contracts. So it's just too small. And, if Uber drops a little bit more tomorrow and even into the Friday session, that could free up some good strikes for next week in the 66.65. So that's why this, on the day like today, guys, I kind of just closed the position. I have a lot of running positions. You can see I have the NVIDIAs here as well for November 29th, this Friday at 134. We'll see. So I do have a decent amount of positions running, and I have a lot of buying power. But as I said, I'm being very picky with my plays, and I'm waiting for conditions to be ripe. If there's not that much premium available for the remainder of the week, well, I'll just ride all of these long positions into the end of the week. I'm not losing anything. We're up a lot this week, and we've closed a lot of good trades as well at nice profits. But I'm not going to start chasing the market, and I'm not going to settle for less premium than I feel that I can get. So if I have to wait a few extra days to use the remainder of my buying power, even though there's deals right now, but just not with enough premium, I will wait those 2 extra days and respect my strategy rules and respect the ROI minimums that I'm looking for when writing put options. So that's pretty much everything for today's video, guys. Hopefully you guys enjoyed that. If you did, consider dropping a like on the video. Would appreciate it for the growth of the channel. Also consider subscribing to the channel if you're new, guys. I do these every Monday through Friday after the close. So hopefully I see you back here soon. And lastly, as always, if you have any questions, please feel free to leave them down below in the comment section. Anything you want. Questions on a stock, on an options play, on the macroeconomic environment right now, the bear market thesis, anything you guys want is always up for grabs. Leave it down below in the comment section, and I will get back to you in the next 24 hours. And in the event that you guys want to join the Discord to have access to all of these real-time trades, right? So here is all the, here's all the private trades essentially that we've made in the past few weeks. You can see a lot more wins than losses, but past performance is not a guarantee of future results. And none of these trades are meant to be financial advice anyways. They're just my trades for educational purposes, of course. And as a whole, if you want those trades, have access to them. Not only do we do the wheel, we do a ton of call options, call debit spread, share swing trades as well, long-term portfolio positions as well. All of that is in the Discord too. And we also do private morning live streams every single morning for about an hour or 2, depending on my available time. And of course, all throughout the day, you guys can ask me juicy questions on your stocks and your options, and I will reply very, very quickly with, supporting charts or any analysis that I feel fit for the answer. So that's pretty much everything. If that interests you and many more aspects, of course, to the Discord, the link is down below in the description. So hopefully I see you in there soon if it does interest you. And if not, I guess I'll see you back on the channel, guys. So take care. That's it for me. I will see you tomorrow after the close. Have fun. Have a great rest of the weekend trading, and peace.